Fidelity, the $4.5 trillion asset manager, predicts the Bitcoin price action hitting $1 billion per coin. That's right. Let's discuss it, shall we? Here's the headline. Can Bitcoin achieve Fidelity's $1 billion price target by 2038? That's the deadline for the target. We're going to be discussing this in great detail, but I also wanted to share something that was shared by Bitcoin for Freedom. He wrote here, Fidelity has talked about a 5% allocation into Bitcoin. If the other asset managers of the spot ETFs do the same, here's what can happen. 17 trillion assets under management times 5% equals $850 billion. Using the BOF bull market multiple, 850 billion times 118 equals 100 trillion in the Bitcoin market cap. 100 trillion divided by 19.5 million coins equals 5.13 million per BTC. So there's some math. And someone chimed in here. Someone put possible, most likely, and someone else wrote, if 850 billion tries to chase available Bitcoin, then the price will exceed 5 million per Bitcoin quite a bit. Maxis are unshakable. Amen. HODL is real. Supply shock is about to be a thing, and the mines will melt when retail and institutions start FOMOing. I say FOMO like a mofo. Let's go. I'm also going to be sharing with you 10 key points that Fidelity recently shared in a report on why investors should consider Bitcoin. Now they have over 43 million investors currently trusting Fidelity. So this is a pretty big deal when it comes to mass adoption. And as pointed out here, there's currently 12 plus spot Bitcoin ETFs that are ready to launch right now. But there is this one ugly man standing in the way by the name of Chairman Gary Gensler. So come on, Gary, do the right thing here for once. And as Plan B shares here, creator of the Bitcoin stock to flow model, ETF approval should come before April 2024 Bitcoin halving, or else the ETFs will have little upside left. Now, stock to flow shows you the price action surpassing 100,000, going as high as 1 million post 2024 halving. If you didn't watch my episode I did yesterday predicting Bitcoin hitting, I think the target was 524,000 per coin post Bitcoin halving, then be sure to check it out because I broke down the math and all the details and quoting the great Plan B. And in other news here, Mike Alfred shared, when BlackRock's Bitcoin ETF is approved, they will need to acquire several 100,000 BTC to fulfill the end customer demand. There is no way they can acquire this much Bitcoin without moving the price significantly. This is the core issue they are actively working on now, hence why they are investing in Bitcoin miners. Would make sense to me. And as Crypto Rover shares, only a few will understand. The BlackRock Bitcoin Spot ETF has a 1-to-1 backing with real BTC. This will push Bitcoin above 100,000 almost instantly. You are early to the game. Amen. Can you say $100,000 fiesta in Puerto Rico? Let's freaking go. Now let's break down some of the math on Fidelity's $1 billion price prediction. This all starts to come from Jurian Timmer, the lady on the thumbnail of today's show. That's Abigail Johnson. She is the female version of Larry Fink. She is the CEO of Fidelity, the $4.5 trillion asset manager, and her grandfather actually founded Fidelity, just FYI. But now let's talk about Jurian Timmer. The director of global macro of Fidelity put forth the notion that Bitcoin has the potential to reach the value of 1 billion per coin in roughly 2 decades from the time he originally made the prediction, which would take us to the year 2038, roughly 15 years from today's date. To support his forecast, Timmer employed a combination of models and charts with a particular focus on the stock to flow model and his own demand model. And I just zoomed it in a little so you can see better on the screen. Let me know if this works. These analytical tools form the foundation of his primary prediction, which you can see here. It shows you the Bitcoin supply and demand models. This above demand model employs Metcalfe's law. And according to this, the number of its users grows linearly. A network's value, or by inference of the Bitcoin price, grows geometrically. This means that the utility and the adoption of Bitcoin are expected to grow more rapidly compared to its network of users, exchanges, ATMs, and participating retailers. Therefore, this model predicted the Bitcoin will reach $1 million by 2030. And I know you've heard that prediction before. Coming from ARK Invest is Kathy Wood. She has her bull scenario at 1.48 million per BTC by the year 2030. Her bear scenario is like roughly 265,000, and her base case stands strong at 650,000 per BTC. Now, in contrast, Timmer's stock to flow supply model notes the event of significant price surges during each halving event. Consequently, when considering this model in conjunction with other factors, it foresees a price range of 1 million to 10 million per coin for Bitcoin by the year 2030. So there you have it. We can do 10x the target of Cathie Wood by that same time frame. Now, Timur's demand model is more inclined towards reflecting the bottom of the Bitcoin price. And on the other hand, we have the stock to flow model, which seems to provide a better approximation for the peak of Bitcoin. However, it's worth noting the disparity between these two models widening significantly beyond the year 2030. The reason behind this gap is expected to be the changing value of the US dollar. That's right. What if the dollar experiences hyperinflation like the Argentine peso? That's when this prediction becomes very realistic. So let's discuss it. Timur proposes that the value of the dollar undergoes fluctuations over time when compared to other assets. For example, if $1 was invested in stocks during the 18th century, its present day value would be roughly $4 billion. Talk about hyperinflation. Good Lord, US dollar. Now, similarly, Timur implied that if $1 million is invested today, it can grow to $1 billion in a span of 20 years. This further revealed that the purchasing power of the dollar has significantly reduced due to factors like inflation and depreciation. Thus, Timur's statement implied that keeping a fixed amount of dollars for many years may lead to reduced purchasing power due to the assets changing value. So there you have it. So is this milestone still achievable for the King coin? Please do let me know your thoughts, because now I actually want to share with you the 10 things to consider according to Fidelity and why you should invest into the King crypto. This is a report they released, I think, back in September, a few months ago. Let me break this down for you. I should be able to pull this up. Let me see. Maybe I got to click on it. There we go. Here we go. We're going to read for you the 10 points. Starting here. Fidelity finds Bitcoin is the best money, clearly, quoting them in the report. Bitcoin clearly possesses a lot of good qualities of money, combining the scarcity and durability of gold with the ease of use, storage, and transportability of fiat. And as you can see here, comparing side by side, gold with Bitcoin and fiat currency, when it comes to durability, divisibility, fungibility, portability, verifiable, scarce, and the track record, with Bitcoin clearly being on top. Now, they also explain the virtuous cycle of Bitcoin, quoting them here. This Bitcoin network competition is likely to result in a winner-take-all scenario as the network grows and becomes more valuable, which ultimately means there is no second best. The winner takes all. And you can see the cycle here they refer to as the virtuous cycle of reflectivity of Bitcoin. Next up, they compare Bitcoin to the invention of the wheel, quoting the report. The invention of the wheel represented an entirely new tech that once invented could never be reinvented. Similarly, never in human history had the problem of peer-to-peer electronic cash been solved until BTC. And they also share, Fidelity is amazed Bitcoin survived. Every minute, hour, day, and year that Bitcoin survives increases its chances of continuing into the future. People would probably underestimate all of the negative events that Bitcoin has already endured. There's like 10,000 obituaries from the mainstream, right? But we're still here, fam. We're still going strong. They also share Fidelity provides hard numerical data showing how secure Bitcoin is compared to the altcoins, quoting them here. In terms of sheer computational power required to alter the network's consensus, Bitcoin far exceeds any remaining proof-of-work competitors. And as I shared yesterday, the Bitcoin hash rate just surpassed 500 quintillion exahashes per second, which is yet a new all-time high, which ultimately means the network for Bitcoin has never been this secure and strong. They also share here, Fidelity compares Bitcoin to the internet. The internet protocol suite, known as TCP/IP, is an open source based layer, applications on top of which to be built. So owning Bitcoin would be akin to being able to own the base layer of the internet. So how many of you own some Bitcoin? Make some noise, because guess what? It's equivalent to owning the base layer of the internet. That's a pretty big deal, my fam. Now, they also write, Bitcoin continues to dominate the market cap of all competing crypto tokens. That's right. As of today, the Bitcoin market cap is roughly 52+% of the entire crypto market, and that can go up to 70, 80%. There's no telling how high it shall climb, as Bitcoin, after all, is the apex predator, right? They also say Fidelity agrees Bitcoin is useful. It appears at this point that Bitcoin has found the role in the digital asset ecosystem as a scarce store value asset at the very least. Amen. And I think there's one more point they make here. Fidelity concludes, Bitcoin should be considered first and separate from all other digital assets that have followed it. Word up. Let me know if you agree or disagree with Fidelity and what's your thoughts surrounding their $1 billion price target in the next 15 years by the year 2038. Let me know your thoughts in the comments below. And also surrounding the major asset managers such as Fidelity and others just allocating 5% of their assets under management into Bitcoin, taking the Bitcoin price to $5+ million per coin. I broke down the math. Now you know. Let's go.